when stocks go down, communication from your financial advisor should go up. But what I find is that many financial advisors don't exactly know what they should be saying to clients during times of extreme volatility or times like now when we're entering a bear market. So they either don't say anything or they communicate once and they feel like they don't want to keep reaching out because they don't know how much communication is too much communication. So I just wanted to share a few different strategies or ideas that you can use to make sure that you're communicating with clients and reassuring them during times of market volatility, extreme market volatility. I'm Samantha Russell, the Chief Evangelist at FMG, and let me share a few different strategies that I've seen work really well. The first thing is just to remember that nobody ever fires their financial advisor for over communicating, okay? They might get rid of you if you under communicate though, because when we don't know enough information or we don't have enough information or we hear crickets from somebody, that is when fear seeps in and we start to make up our own assumptions about what's going on. So communicating even more than you might think that the person needs, in my opinion, is a better strategy than not communicating enough. And different studies have shown that this is true. For instance, Y Charts did a study in 2019 that found that most clients feel that they are not engaged enough by their advisor. So keep that in mind. But what are some things you can do? Number one, you can put this time into historical context, right? So there's a great chart from Dimensional Fund Advisors where they show the the ups and the downs of the market over the last 100 or so years. And it really helps you just at a quick visual glance see that historically every single bear market is eventually followed by a bull, right? And you can just see that through a visual. And as an advisor, it really helps contextualize what's going on for clients, especially those that maybe this is the first bear market that they are really having to live through. The next thing is following that, any kind of visuals that you can use are going to help you communicate a lot more effectively. So again, trying to put things in context for people. This is a great chart from Bank of America where they talk about the difficulties of trying to time the market, right? And so you can have a conversation in your office with somebody about this, but showing them a chart like this is going to be so much more powerful where they can just quickly digest those numbers and the visual is going to speak volumes, right? Our brains can process imagery 10,000 times faster than text. And so this is a great example of that. Another thing is just helping them remember why they hired you, which is that you're going to be the one to prevent them from getting emotional with their money and pulling the trigger and making a bad decision at a time like this where it is really hard to not want to back out or to change their portfolio. So helping them remember why they hired you is another great communication strategy. You can show them a chart like this one, which shows the equity allocation change in response to the S&P 500 falling 10 to 20%. So this is a great study that was done where they asked investors, institutions, and advisors, would you decrease or increase your equity allocation if the markets were to go down? And you can see here in the responses what people said that they would do, and that we know that the institutions and the advisors are going to be a lot less emotional about these decisions. And so that is a great way for you to help them remember why they hired you. So hopefully these are some different communication strategies that will help you when you're thinking about how to communicate with clients at a really volatile time like this. For even more marketing tips, make sure that you're following FMG and me, Samantha Russell, and we'll see you soon for another marketing tip.